Good morning, everybody. Welcome to today's webinar, How to Sell Non-QM Part 1. Part 1 is this week. We're going to be talking about 3 specific programs, and Part 2 is next week, which you're already registered for. Now, as questions come up throughout the webinar, please go ahead and use the little questions box. We want this to be as engaging for you as possible. So if you have comments or questions throughout the webinar, go ahead and use that tool, and I will share them with the speakers on your behalf. So with that, I would like to turn it over to today's speakers. Take it away, Joe.
Thank you, Rose. You want to move the slide? Introducing, I guess I can introduce us. My name is Joe Leiden. I'm one of the co-founders here at LendSure, and we have Janice, one of my top account executives, and Tanner. Both of them are top account executives.
Hello.
Janice works out of San Diego, California, and Tanner works out of Salt Lake City. So we're going to talk with you today about things that we think will be useful to you. On the agenda today, we're going to talk about some of the loan programs that we have, market opportunities. I think most of the conversation will be around helping you think about how to find leads and referral sources for non-QM types of business. So we hope that you'll enjoy the interaction between the three of us, but the goal is to give you some ideas as to how to go and originate non-QM business. Next slide there. So just a little bit on LendSure. Been around for 6, 7, 8 years, I guess. Headquartered in San Diego. We've got offices in Rhode Island, Atlanta, Salt Lake, and San Diego. We securitize most of the loans that we do. The loan performance on the loans that we securitize is very good. The management team, senior management team here at LendSure used to be the management team at accredited home lenders, very deep in terms of experience. We've got licenses in 47 states, and we still are growing the licensure number. What we do, let's see, is this one mine? Yeah, I guess this is fine. So I like to answer this question with what we really don't do. We don't do conventional, we don't do VA, we don't do FHA. We're principally focused on non-QM lending. Very good at it. When brokers ask me, tell us the kinds of loans that we do, I generally answer them with the loans that we do are on the edges of Fannie and Freddie, edges of conventional. They then ask me for some examples, and I say, well, let me first describe a securitization to you to give you a feel for, Rose, you might want to mute yourself, to give you a feel for the kinds of loans that we do. So average FICO, probably 735, average LTV in the 68% range. Those two numbers in itself should kind of make you curious as to, why is it those people are doing business with you? And principally, it's because we're doing loans that are just missing Fannie and Freddie, meaning usually they're missing on the income front. And what I mean by that is they can't get into the end zone with full doc income. So there's something else. Maybe it's 1 year full doc, maybe it's W-2s only, 1099s only, maybe it's less than 2 years in the same job, maybe it's less than 2 years self-employed, maybe it's bank statement income, asset depletion income. All of those are things that we do and we do regularly, and we're good at it. If it's not an income issue, it's likely something to do with the property, something unique about the property. And then of course we do investor loans as well. So those are I think the 3 reasons principally as to, why is a borrower coming in our direction. There are other things, but principally that's the audience of borrowers that we do business with.
Yeah, I would agree with all that. I think that everything that Joe just spoke to kind of speaks to the growth of non-QM. Why are we seeing more and more and more borrowers turning towards non-QM, and seeing this, really blossom into a very large space, a lot of money going through non-QM. Just in 2021, $28.6 billion. And that's, I think, continuing to grow, at least as a percentage. Obviously, in the last year, with where rates have gone and what things have happened, there's been somewhat of a decline. But as a percentage, non-QM is going up. It's continuing to kind of come into its own, I would say, and there's a lot of reasons for that. The demand for self-employed borrowers is going up. People like Joe said that would write off, right, a lot of stuff on their taxes. The full doc income isn't there. We do bank statement loans for, right? There's a lot of borrowers that are in that bucket that could qualify with a 2.5% rate, right? Even though I'm writing off a bunch and my income's super low, 2.5% rate gets my payment down low enough that I'm able to still qualify. And now with rates where they are, it's not that way anymore. If you want to continue to write off what you write off and avoid paying the IRS as much as you can, then you're going to have to look into some non-QM options. So there's other things that are happening that are pushing people towards non-QM as well, outside of the rates. You look at Fannie Freddie and changes they've made with their condo questionnaire, and what determines whether a condo is warrantable or not. The LLPAs for second homes. It seems like just every day Fannie Freddie's releasing adjustments and changes that sometimes make it a little bit easier in certain cases, but a lot of times makes it a little bit harder to get people approved. So we're expecting things to continue on this trend, continue to grow. It's something that we've been super excited to see. And more and more, I hear loan officers that used to say, "Oh, I don't do non-QM," or "I don't see non-QM," or "I don't want to learn non-QM." Now are saying the exact opposite, right? They're saying it's about time I know exactly what this is and how to do it, because I'm just missing out on business if I don't.
So true. That's so true, Tanner. We're going to hit up a little bit on bank statement loans because it's such a big opportunity, guys. It's like knock, knock, what's their opportunity? There's so many people who are freelance workers, and millennials are leading the way. You have so many people working from home, doing their own thing, and it's an untapped opportunity. If you haven't done a bank statement loan, this is really the chance to start really getting your feet wet. And we're going to talk to you about where do you find self-employed borrowers? Where do you find freelancers? How do you get your hands on this type of loan? Now, you might have already run into this and just looked at the tax returns and said, sorry, buddy, you don't qualify. Well, we're here to help you actually see that many times you can get a loan for your borrower or get them to qualify for the home that they actually want versus, a smaller home. So lots of opportunity for the self-employed. It really is
It,
amazing,
used to
right?
be hard to be employed. Now it's easy, right? Now everybody can hop on DoorDash, Uber, right? Whatever it is. The number of self-employed borrowers is growing exponentially. So this loan is very important.
It is, and it just really gives you a solution for those borrowers. You become their hero, and they come back or they refer, other people to you. So a little bit about how our bank statement program works, and also why it's so unique. It's something I really love about us, is we're going to do an upfront pre-approval, which means we're going to look at your income at the beginning versus waiting for the underwriter at the end to look at it and say doesn't work, right? So we're going to do that, and we don't require a CPA letter or profit and loss, which many times will ruin a deal because that profit and loss doesn't match up. So it's really actually really cool that we don't require that. What we do ask for is questions to understand your borrower's income. We want to know what their expenses are. I guess not all businesses are created equally, so their expense factor might not be 50%. A lot of competitors just take away 50% of their income. We don't do that. We can go as low as 10%, which is really amazing. We accept multiple business bank accounts or personal accounts. Honestly, you just reach out to your account executive and they'll walk you through it. That's what I do every day. I talk to people, right, Tanner? I'm sure you do too.
Yeah.
And we do go up to 90 LTV on bank statement loans. It does require 740 FICO, so just keep your eye on that, FICO score. And it's 12 or 24 months. I always recommend 24 months because if 24 doesn't work, we'll lower it to 12. But 24 months is going to get you a higher LTV. It's going to get you a quicker approval, just because if there's no questions and we know they have solid income, it's just going to be a little bit of a smoother process and a better rate. So anyway, how to find referral sources. Tanner.
Yeah. So the low-hanging fruit here is going to be your agents, right? Agents are an excellent example of people that are self-employed with very low expenses, right? Maybe some gas, maybe some marketing materials, right? Things of that sort, but really not a lot of overhead to be an agent. And you talk to agents every day, right? They're your primary referral source. So, when you talk to them about, hey, loans that you're looking for personally, whether that be a primary or an investment or whatever it may be, you likely have to look outside the box. And if you're writing off, as much as most people are on their taxes, this is absolutely the first place to start when looking for different referral sources for bank statement loans. But beyond that, once you've kind of educated, right, talk to your agents about this program, where do you start looking next? What's the next logical step? Well, there's a lot of different places, right? We have networking events, including like trade shows, right? For self-employed people, business owners. You yourself can organize things, reaching out to, local groups as far as what's on Facebook and Rotary clubs, social media platforms, right? Really just targeting that networking self-employed individual. There's a lot of different ways to go about doing that that are going to be very effective for you. And another bullet on here is the CPAs. I think this is an incredibly underutilized referral source where, who's helping the borrower when it comes to planning and how much should we be writing off, how much income should we be claiming. It's the CPAs, right? There are some borrowers that are self-preparing, but most business owners are getting a professional involved. And so when it comes to a financial planner or tax preparer that's trying to help a borrower say, hey, I want to buy a home this year, well, let me give you some options, right? Traditionally, they would say, well, we have to claim income. But if they can instead say, we have to claim income, or we could look into a non-QM bank statement loan for you and keep doing exactly what we've been doing on the tax front. And instead, you'll just, provide documentation for this loan in a little bit more creative of a way. I think that's an excellent place to start looking for businesses, talking to those CPAs and trying to partner with them in ways that you can help them be kind of a one-stop shop for their financial planning.
Totally agree with you, Tanner. That's where you're going to see it.
Now, we put together some talking points for you, and this is just to give you a little bit of a comfort level. You're in an elevator with a business owner, or you're chatting with some.
Back up a little. Last slide. You're moving too fast with those slides. So a few other ideas on referral sources. Your local banks have branch managers inside those banks, and customers approach them for loans, and then they're usually passed off to their loan centers. But those people are not always approved. So local bank branch managers are a terrific referral source. I grew a very large business on those referral sources alone in the past. So bank managers, attorneys, trust attorneys. We do loans to people who have loans and have their assets in trusts. We get questions along those lines all the time. I get referrals directly from trust attorneys whom I know. Divorce attorneys are excellent referral sources. People get divorced, they have to dispose of assets, they have to renew loans out of the spouse's name. All of those kinds of things come from divorce attorneys. Bankruptcy attorneys, we do take loans out of 13 plans all the time. And then other tax attorneys as well. So attorneys are a great referral source as well. Credit unions are great resources as well. So all of those are referral opportunities for you. And
Yeah.
if I were a retail loan officer, I would absolutely be talking to all of those types of people.
We'll hit on this in just a minute, but we can also close investment loans and even some primaries in the name of an LLC. So along that same line that Joe is talking about with attorneys that are helping set up business entities and LLCs for borrowers, we can close in the name of that entity. So we will hit on that in a bit, but yeah, absolutely.
Guys, Rich wants to know, what's the max loan amount on a bank statement loan, and are gift funds allowed?
It's a great question.
Yeah.
So typically our max loan amount on a bank statement deal for an owner occupied property is going to be 3 million at a 75 LTV. Now we have gone above and beyond that in the past. It's really just got to be a make sense deal, be it much lower LTVs, really strong borrowers, you know, strong FICO, strong income as far as what we do see on the bank statements. So we've definitely gone north of that number on an exception basis, especially, you know, involving exception pricing, but typically it's 3 million at a 75 LTV, and gift funds are allowed at a max of 80 LTV, but you know, it does weaken our loan profile. We do ask ourselves, you know, how much skin in the game does our borrower really have? That's a huge topic of conversation when it comes to, you know, underwriting a loan and risk assessment. So we really want as much of the down payment as possible to come from the borrowers. It may be the type of situation where we say, well, hey, we'll allow gift funds here, but we want to cut LTV. Maybe we'll do this loan at 75 with gift as opposed to 80 without, right? So just all things we consider from an underwriting perspective, but yeah, they are allowed. We do require 60-day source and seasoning on our gift, which is something that may not be something you're used to. So keep that in mind as well.
Do we do commercial loans and do we do HELOCs?
No HELOCs, but we do have a commercial product, which would be residential in nature, our 5 to 8 unit, which we'll touch upon shortly with our investment loans. So 5 to 8 units is a yes, up to 70 LTV, but no, they have to be residential units.
And then we do fixed flip loans as well, that are deemed to be commercial.
That's true.
Yep.
Thank you, Joe.
Which we'll talk about.
No, good. And Will says, I took an app in February. Their taxes showed 5K income, but Schedule C showed 500K in revenue. Flipped to a bank statement closed and closed on it last month. So,
Oh, that's
There you go.
great.
satisfied
Proof in the
customer.
pudding.
And yeah, I've got several questions about whether the slide deck is going to be available and whether this is being recorded. Look for an email from me, Rose Waldy, about an hour after the webinar. You're going to get a copy of the slide deck. You're going to get the private label resources there, and you're going to get a copy of the slide deck. So, and yes, you're going to be getting the contact info for Janice and Tanner as well. I've got a couple of people wanting to reach out to you guys right away.
Yay.
The talking points. I put together just some talking points for you. This is just little elevator pitches. This is just you're at a cocktail party. Just some things to have in your back pocket if someone asks you about these bank statement loans. So these are available to you. Do you guys have Janice and Tanner and Joe anything else to kind of add to this when you're talking about bank statement loans?
I've seen from my clients in the past that once they close one bank statement deal, they're able to really talk it up as well. So I think if you have one client in mind, that client can bring you more loans. I had somebody that I helped close a loan for, and he referred 3 or 4 other borrowers to my LO, and we closed all those loans too. He fixed and flipped homes for a living. He had been turned down by 4 or 5 different banks. It was not an easy bank statement loan, but we made it make sense. We took the time to make that happen. And, you know, he was in that business, so he was able to refer other self-employed borrowers. So I say sometimes referrals are great. So you get your feet wet with this. That would be something I would add to it. But, you know, just talking it up and saying, hey, look, you declare a lot of loss on your taxes, but make money. Your bank statements could help you qualify.
Yeah, one other thing on.
Go on,
Oh,
Dan.
go ahead, Joe.
I would add that the bank statement loan scares off a lot of loan officers because they're not familiar with it in the conventional space. It's really not that hard a loan when you're dealing with us. We can spread 24 months bank statements in literally 14, 15 minutes because we have all of that automated. So we take the mystery and the intimidation out of bank statement loans. We do that for you in our pre-qual process. So you shouldn't be afraid of, oh my God, I don't know how to do these. Give us a 1003 and a credit bureau and the 24 months bank statements and we can turn it around, you know, most cases 24 hours. But The automation is done in 15 minutes, but in terms of coming back to you with a pre-approval, it's usually 4 hours to 24 hours or so.
One thing I would add on bank statement loans that we can also do is we can do them for wage earners. We talked a lot about self-employed. We can do bank statement loans for wage earners that are making over 50% of their income in unreported cash tips. So, I mean, really, you're looking at bartenders, waitresses, that type of thing. But I do a lot of business in Vegas where we're also talking about card dealers, you know, bellhops, taxi drivers, right? That sort of thing. Where, you know, we see a lot of cash deposits on the bank statements. It makes sense for their line of work. It's consistent. We have a strong overall loan, good compensating factors, and we're able to get it done. So keep that in mind as well for borrowers that are struggling with their low W-2s when really they're pocketing their cash tips.
I've got two kind of related questions. One question is, could you take a minute to walk us through the cost and pricing of that loan? And another one is, how do we compare with hard money lenders here?
Oh yeah, great question.
Great questions, yeah. So this is something we'll hit on in a bit, but we very much bridge the gap between conforming and hard money. We're kind of a nice middle ground. So I always tell people you should be giving us a call before you turn to hard money, right? Even if you think we're not going to be able to do it, even if you think it's too difficult, always at least run it by us to see if it's something we think we can do, because our terms, our rate, our points, you know, we're doing 30, 40-year fixed. All of that is going to beat hard money. And the balloon payments and those sorts of things that come with that. So we're always going to beat hard money in those ways. There are some times where hard money will be better, just as far as like turn times, you know, closing a loan in 5 days, things of that sort, where we're still sending an LE, we're sending a CD, right? We're doing all kinds of stuff where we still abide by, you know, government regulations and trade and those things. So there are some times that you know, hard money is just going to have to be the only option you have, but I always suggest calling us first just to see if it's something we can do before you turn there. And then as far as rate and points, Janice, do you want to hop in on that one?
Sure. Well, I also received a text and I was glancing at it regarding does this apply to investment properties and to second homes and primaries? Yes, we can qualify bank statement loans for investment properties, second homes, or primary, and pricing will differ depending on that program. So, you know, we're probably in the range of, off of the top of my head, mid sevens to low nines, I believe. So if you were doing like a 10% down, you're going to be more in that 9 range. And if you're doing, you know, 50 LTV, I just quoted somebody 50 LTV, 7.25, I believe. So it's not that, and I always get this reaction, oh, that's not that bad. It really is not that bad. And you know, that's kind of around the range where I would say. And I think we beat hard money all the time. We should always be an option before you take that borrower elsewhere. Is let us take a look at that income and we'll find out. We'll let you know.
And
Awesome. A
speaking
couple of
real quick to points, because that was part of that question too, is rate and points. Yeah, the only loans we have origination on as a lender is going to be condo hotels, which we'll talk about next week, and our bridge loan, which we'll talk about next week, which are phenomenal programs in their own right. But typically we have no points involved. We do have our underwriting fee because we're underwriting the loan, and that helps you know, cover our back end costs. But the only points we'd have is optional rate buy down. And then you would have your points as the broker, the loan officer that's brokering us the loan, in borrower paid comp or lender paid comp. And we even have options as far as financing those points into the loan amount, which is very unique to us, where we'll take some of those points and those costs and we'll wrap them up and build them into the loan amount, so that we kind of simultaneously lower our cash to close, our rate, and our payment all at the same time. So it's something that absolutely wins us deals in so many different instances with competitors that we'll definitely talk more about. But the rate and point conversation, I think I'd be remiss if I didn't mention financing of points in that conversation.
100%. Thanks. Yeah.
If I were adding to that, that Tanner just mentioned, so our rates are based on FICO and LTV. Generally, they start there. We have a table that has LTV going across the top of the table and FICO going down the side of the table. And then And the lower LTVs, higher FICOs obviously have lower rates, and the lower FICOs and higher LTVs, or the reverse, have lower rates, and then the higher LTVs and lower FICOs have higher rates. So it starts out with a table, and then there are adders for different things, like additional risk items, like are we charging for bank statements, are we charging for cash out, and so on. But it's important to understand that the table is moving across. So the interest rate may be low point at 7%. You move over one notch into another LTV, it's going up an eighth to a quarter. So when Tanner starts mentioning that we're stacking, it means that if you're in the 70 bucket, call it a 70-740 bucket, guy's got a 740 FICO, 70 LTV. When Tanner says we're going to stack it, it means that we're not only going to finance those points, we're going to finance the points over and above the 70%, which is going to push us into the next bucket, which is 75. But we're not going to push you into the next interest rate. We won't charge you the interest rate for the 75 bucket. So you get the points financed, and you get them financed at the lower rate in the lower rate bucket.
Yeah, and you start introducing rate buy down on top of that would normally be due out of pocket, that's getting financed. We get rates that our par may be the same or higher than a competitor, but our final rate once we've financed it blows them out of the water, right?
So when you we put together some marketing resources for you, just now that you have some information on the program, now you can start reaching out to your referral sources and your borrowers right away. So we've included some email templates, we've got some flyers, all of which are customizable. You can put your logo on it, your contact information. We've got even some social media graphics here. So look for the email from me in about an hour, and that's going to continue, this slide deck. In the slide deck is the actual links to each of these things. So just click on one, and that's going to open it, customize it, and you can start generating new business right away. Now we're going to property investment loans.
All right. Who doesn't love a property investor? I mean, they come back, right? This is repeat business. And if you're not tapping into this, or you've, just wet your feet, this is really something that is a great opportunity. So, we're looking at all types of, properties. So, Tanner mentioned we're going to be talking about, even condo hotels. He was going to kind of talk about that a little bit, or short-term rentals, vacation properties. But, we're also looking at single family homes. They still continue to be a very popular investment, especially after COVID, right? People want more space, people working from home. So these properties are going to be popular, and people need places to rent, right? So we have a wide variety of different property investment loans to offer. That question about bank statements, if you had a self-employed borrower who's buying an investment property, they could qualify that way. And with our DSCR loan is another way, no income. But right now, sometimes that rate isn't helping the ratio. So we could, qualify in different ways. So anything you'd like to add about that, Tanner?
Yeah, I think you hit the nail on the head. The people that are still buying properties when rates go up and the market slows down are the investors, because they're getting great deals on homes, right? They're getting purchase prices that are slashed down 10, 20, 30 grand. They're getting seller concessions. They're getting a lot of things where it still makes sense to buy, right? They don't have to buy, they have the option to buy, and so they exercise that option. There's a lot of people that are buying owner-occ. They say, oh, well, this is going to be my primary. I got to be able to afford the payment. It's going to be the biggest expense in my life, and blah, blah, blah. So they say, oh, we'll wait. We'll continue to rent a little bit. But investors are still buying, and buying even faster oftentimes when the market slows down. So that's really who you want to be targeting and working with in times where you feel business is slow.
Yeah, and they'll just keep coming back too. So that's always good, repeat business. So that's where it comes to building those relationships with investors, right? So I just said that they don't stop with just one property.
They don't, and every investor has their go-to, right? That's how they built their investment portfolio in the first place, is they have their go-to person that they've gotten all their loans with. And so hopefully these programs and the types of things that we're going to talk about are going to give you tools to become their new go-to, their new person, right? So a little bit about some of our investment property loans, the different things we can do on them. We have no cap to the number of properties that a borrower can finance. So typically with Fannie Freddie, they won't go above 10 loans.
Yeah.
We don't care if you have 10 with Fannie Freddie and another 10 with another non-QM lender and another 10 hard money, right? We may go another 10 with you if you're a great borrower and you check all of our boxes and, you know, mortgage history, all that fun stuff. So we have no cap. We'll even sometimes go on above beyond the 10 that we do ourselves. If we have good compensating factors and, you know, exception pricing is part of that conversation, when the purchases are is part of that conversation. So putting them in different securitization pools certainly helps us, you know, someone that's buying 20 properties over the course of 2 years instead of 2 months, right? That type of thing. We'll qualify with the interest only payments, which is huge, whether that's DSCR or using income. Being able to use that lower starting IO payment in the DTI calculation or in the DSCR ratio calculation goes a long way. A lot of times investors want the interest only anyway, just for the better cash flow. It doesn't even matter about qualifying. They just like 40-year fixed IO, yeah, I'll take that, right?
They love it. Right. I mean, that you have to kind of really think about that, right, Tanner? Like we offer a 10-year interest only loan, and investors they really do love the option to have cash flow. Because why are people investing in properties anyway? Right? To make money.
Yep.
So, I mean, that honestly, I've gotten loans just based on the fact that we can close in an interest only. So,
Yeah, absolutely.
yeah.
Yeah, it's top of mind when we're talking about investment properties in our day-to-day, Janice and I.
Yeah.
No income docs, no REO docs needed for DSCR. So DSCR is a very easy to use, right, low hassle program where we see people that come to DSCR that could qualify for a Fannie Freddie loan, right? They could get a conforming loan. They could pull the teeth to provide the tax returns and the K-1s and the business returns and the, you know, REO docs for their other investment properties as far as taxes, insurance, HOA dues, mortgage statements, lease agreements, right? You name it. It gets crazy, right? You guys know, you know, anytime you do a conforming investment loan for somebody that's got 10 properties, it's a pain in the butt. So our DSCR knocks all those documents out of the picture, and instead we're just looking at our subject. Does our subject cash flow?
Yep.
And with that is fast closings, right? Minimal conditions, very little to have the underwriter sign off on. So we don't have to abide by TRID on these business purpose loans. So no 3-day waiting period on CD, you know, no rescission or anything like that when we're doing refis. So we're able to get these closed a lot quicker. You can close in the LLC, right? Like I mentioned, or the corporation. So a lot of investors love that, where they can avoid the hassle of quit claiming it into the LLC after the fact. Or, you know, having to pay the fees to do so, right? And closing in the LLC oftentimes simplifies it, just get it done from the get-go. And we do have rate buy down to help, again, improve that cash flow, get borrowers to a place where they're making money, right? Like Janice said, and it's a make sense investment for them.
Absolutely.
So here's some more investor talking points. You guys are going to get a copy of the slides. And again, these are just things that we put together. So little elevator pitches, little quick things to get you guys started on the conversation of investment property loans. Guys, if you're closing in an LLC, can you do interest only and the LLC?
Oh, yeah.
Absolutely.
Can foreign nationals do DSCR?
Yes, they can. And we will be touching upon foreign nationals shortly. So, yeah, stay tuned.
The very next program we're covering, yep.
Yep.
Awesome. All right. So here's a quick thing. You know, I hear, of course, you're wondering, where do you find leads for this? This is a quick exercise that I want you guys to do after this, after the webinar. Go to Facebook, go to groups, you click on groups here, and then just put in property investors and then your city, your state, your regional area. Here I put in property investors San Diego, and as you can see, there's a ton of different groups, 1.8 thousand, 2.8 thousand, etc. So these are people that are actively talking to each other, looking for solutions. So this is a great way to just start joining these groups and reaching out to people who are actively participating in buying properties and perhaps looking for better solutions for their financing. And again, here as well, we put together some resources for you around investment property. There's flyers that you can customize. Here's a slide deck that you can put together for your real estate, for your realtor referral sources. By the way, if you're nervous about doing a presentation about realtors in front of realtors, contact your LendSure account executive. If they're local, more times than not, they're more than happy to go with you to visit realtors and do these presentations for you so that they're there to answer the technical questions and social media things as well. Foreign
For
nationals.
We do a
So
lot of
exciting.
foreign national loans. So the first thing I want to talk about is who exactly a foreign national is and isn't, because I still get a lot of phone calls from people that say, hey, I got a potential foreign national loan for you. They have a work authorization card and they're buying a primary. And I'm like, oh, that's not a foreign national. So who are foreign nationals not? Foreign nationals are obviously not US citizens or permanent resident aliens. So that's the most common person that you're going to run into. You're going to run into somebody that either has their green card, right, via their permanent resident alien status, or they're a US citizen. And in those cases, those people would not be considered foreign nationals. Similarly, you have non-permanent resident aliens, which are those with a work visa, sometimes also known as an EAD card, an employment authorization document. Those people have permission essentially to live in the US and work in the US via that work visa. So they also would not be considered foreign nationals. What we're talking about really is borrowers who live and work in a foreign country. So if you are living in Canada or Mexico or any other number of countries, you're working there, it's where really everything is set up, right? It's your home base, and you're trying to buy an investment property or a second home in the US, that's who we're really talking about on this program. So ITIN numbers can kind of sometimes throw a wrench into things. Foreign nationals may have an ITIN number. That means that they operate a business or own property in the US that they pay US taxes on via that ITIN number. But that doesn't necessarily make them an ITIN borrower. When we talk about ITIN borrowers in our ITIN program, we're talking about borrowers with ITINs that are living in the US without the proper documentation. They don't have the visa, right? But they're still paying US taxes via their ITIN number. There's two separate buckets that those borrowers fall into, right? There's the ITIN borrowers living in the US buying a primary, and then there's the foreign national borrowers who just happen to have an ITIN as well, right? Because there's different program maximums, as far as LTVs and FICOs and different things that will apply differently to those two different kinds of borrowers.
And Tanner, it's great that you helped kind of decipher that because it can get very confusing. But I do encourage everybody, if you have a scenario and you're not quite sure what it is, call your account executive at LendSure and talk to them and say, this is what I have. And they'll help you tell you, hey, this is going to be a foreign national, or you know what, this is a straight up ITIN. We also do loans for non-permanent resident aliens. So there's still a home there, right? Depending on the scenario, we'll help you put it together. And because I know that foreign national loans aren't something that maybe you do every day, but we do. So we'll help you.
That's a fantastic call out on the non-permanent resident aliens, because that work visa that they have, there's a lot of different types, like dozens of different types, right? And so you may have closed loans for non-permanent resident aliens before that are Fannie Freddie loans that meet their guidelines, and it's a permitted work visa type. And then there are other types that aren't permitted that maybe we are the only ones that can do. Maybe it's an exception, maybe it's not, maybe it's in our guidelines and it's not in Fannie Freddie guidelines, but we don't really market or say, oh, we have a non-permanent resident program, but we do oftentimes close non-permanent resident loans that can't be closed elsewhere.
Yep, that's true. Okay, I guess I can touch upon this. Why are we even talking about foreign national loans? It's a huge opportunity. Another opportunity knocking is really how I see it. It is such a big opportunity that a lot of loan officers don't go after. So you can be that loan officer that actually goes and gets this type of client. And we're going to talk about, well, where do we find foreign national loans? How do you even get started? So there's some facts here. There's 98,600 foreign national buyers annually. That's quite a bit. So lot of people out there that want to buy a second home or investment property, they don't know they can do this with financing. So that's huge, and they're usually pretty solid borrowers that have the money to buy the property cash sometimes, but you're going to offer them financing and really help them out. So it's just a great opportunity. So that's why we're touching upon it. I think I skipped Rose. Maybe you should handle the slide deck.
Oh, no, that's fine. So here's just the top 5 areas that we're seeing based on this report down here of where these foreign national people come from, Canada being at the top, followed by Mexico, China, India, and Brazil. And then this is the top places that they're buying in. Number 1, Florida, which isn't particularly surprising, California, Texas, Arizona, New York, and North Carolina. But they're everywhere. They're everywhere across the country.
Yeah, I see a lot in resort cities, kind of mountain area, right? You're talking about Colorado, Utah, obviously being from Utah, I would see a lot of those. But people that are from Canada or other places and want to get a second home for skiing, snowboarding, that kind of thing.
All right. Well, we kind of touched upon this already, Tanner. But just to clarify, borrowers can buy second homes. I think right now we might be one of the only lenders that allows second homes for foreign national as well as investment properties. So there's an income verification letter from an employer or an investor. That's how you would get them to qualify for a second home, right? So you get a CPA from their foreign country or their employer from their foreign country to write us a letter with the past 2 years of income and year to date, and we'll use that to qualify them. Or we can do DSCR, which I believe was a question somebody had. So we could do this just based on cash flow if they're buying an investment. That we don't require foreign tax returns. We do accept foreign credit report, which is amazing. So many countries actually do have foreign credit. So it's very easy for us to find out if they have it and then help you find where that borrower can pull their credit. We also accept alternate trade line letters for those countries that don't have a foreign credit report. Up to 25% down. I've seen a lot of competitors actually watching a reel on Instagram for a realtor that I know, and he was talking in Spanish, and he said, 30% down if you want to buy a home. And I reached out to him and said, hey, you should contact your loan officer. I have a 25% down program. He was very happy to hear that. So cash out LTVs up to 65. And, we do various types of visas are accepted. Just let your AE know what kind of visa. Always ask those questions and we can help you structure these deals.
And I'm getting a lot of questions about very specific scenarios. I want to provide you guys with the most accurate and complete information possible. So what I'm going to do is for those, I'm going to have an account executive reach out to you after the webinar and talk you through the loan scenarios and make sure that you have as complete and accurate information as possible.
Rose, read some of them now. I'd like to hear them.
You're putting me on the spot.
Yeah, so
for foreign nationals, the credit report ordered via their ITIN number?
No, actually, so that's difficult to say. If they have an ITIN number, they don't live in the country, like Tanner touched upon, they live abroad, they work abroad and happen to have an ITIN number, then we would accept an American credit report in that case, if it has enough trade lines. But typically, for example, I'm from Mexico and hablo español, so there's Buró de Crédito Especial, and I literally found this on Google. There is a Mexican credit bureau. The borrower goes in, fills out some information that they have, and then they obtain the credit report. That's for Mexico. It could vary by country, but we do accept American credit report when it fits the scenario. So.
All right. How about this one, Joe? I have a Ukrainian refugee who came out about 8 months ago. Can you do that for a primary home? She has a social security number, but is a foreign national.
Yeah, so that one would fit into the I have a visa of some kind classification, probably a refugee visa. So because you're buying a primary, that wouldn't fit into our foreign national program, which is second home investments only for people living outside the US, right? So I would have to know exactly what visa they have and what status it is. Like I said, probably refugee. and we would need to, have a full picture of what the loan looks like to even begin discussing it, as far as, well, did they pick up work when they got here, and what do they have for down payment, and what trade lines can they show, either since they got here, or even more importantly, back from when they lived in the Ukraine, if they had a car, or they had credit or cards or something of that sort from the time that they lived in Ukraine. I've done loans for people that moved to the US brand new. So like I did one for a Canadian guy that was transferred from his company's Canadian branch to their US branch. And so he was brand new to the US. He was a non-permanent resident alien who had a work visa, but he had no US credit. In that situation, we underwrote the loan using his Canadian credit, right, foreign credit, but it was still not technically a foreign national loan. It was a non-permanent resident loan.
Case by case, I would say case by case.
I've got a couple of questions about bank statements from other countries. I'm not sure if they're talking about bank statement loan foreign national, or how would you handle like from China and other countries?
Yes. So assets we can use from a foreign country, it needs to be moved to the US before we close. So when we talk about source and seasoning of funds, it's 60 days. We can accept foreign bank account statements for the source and seasoning. We have to get it translated if it's not in English. We have to get it converted to US dollars if it's not in US dollars. But we can accept that as long as it moves to the US before it gets moved to title, right, and transferred to title. But if we're talking about like a foreign business that we're trying to do 12 or 24 months of bank statements on, typically we can't do that.
No, but a solution.
However, we do allow for a letter from the CPA in that country. So
Correct.
It's actually easier than doing a bank statement loan. So if you're asking, are we doing bank statement loans for self-employed individuals in the foreign national program? The answer is no, but the income documentation is nothing more than a CPA letter from their CPA saying Fast Freddy here makes $20,000 a month.
Yeah, it's easier.
Is the buyer required to provide everything in English?
That's a great question. So because I do speak Spanish, I usually review for pre-approval documents in Spanish, but you're definitely going to need to have a third-party translator, a certified translator, translate the documents for our underwriter. So, every team's going to maybe look at each income situation differently and try and decipher for the pre-approval process. So that would be case by case, but we definitely are going to need English documents. That's part of our requirements.
It certainly helps if the PDFs you send over are readable PDFs, meaning they're not like scans. Because if it's a readable PDF, I can actually plug it into Google Translate and have Google Translate turn it into English for me, just for that pre-approval. We can't accept Google Translate for the underwriter. We have to get it certified translated. But at least for the pre-approval, I can take your German documents or French documents or whatever it is, plug it into Google Translate and get it back out. But if it's scanned like a fax, then typically Google Translate won't work. And so we got to either get it translated up front, or like Janice said, in some cases, she speaks Spanish, so we can potentially, get past that in the pre-approval stage just on, our own internal knowledge.
Yeah. And that pre-approval is going to really review income. They're going to look at the credit, make sure there's, they don't have like a lot of late payments and things of that nature. So it does hold some weight, but once you're getting into like the official conditional approval, underwriter really needs to be able to vet that loan out in English, right? So that's why. So.
Pete has a presentation tomorrow in front of the International Board of the San Diego Association of Realtors. Does anybody want to come with me? Pete, reach out to me. We'll get somebody there with you to present, whether it's Janice. If she's not available, I can get another account executive to be there, and I can provide some content, and I can customize some marketing resources for you. I'll even put the logo in for you. So absolutely, we can help. So talking points. Here's some more talking points. Again, these are just things to just conversation starters that I thought that you guys might find helpful. You can review these on your own after I send you guys the slide deck. One point here is that delayed financing is available for foreign nationals who purchase with cash, since I know a lot of them purchase with cash. Janice or Tanner, do you guys want to touch on that one?
Yeah, I
Just
mean,
exactly.
yeah.
Yeah.
Well, they don't know. They don't, right? You might find a foreign national who already paid cash for a house. Now, normally it's within 90 days of the purchase that we'll call this a delayed purchase versus a cash out refi. But either way, we can, find a way to help them get some of their money back because they just, spent all that money not knowing that there was a foreign national product out there for them. So.
This is one of two cases where you'll find the most properties owned in all cash. One is foreign national because they don't know they can get financing, so they buy it in all cash, and they're very affluent, right? The second is condotels. A lot of people don't know condotels have financing options available, so you'll see a lot of those purchases and ownerships in all cash as well. So that's something we'll hit on next week with our cash out programs on condotels.
Fantastic. Finding referral sources. Janice, did you want to talk to this a little bit?
Sure. Well, there are a lot of ways to find. I don't know. Personally, I think, well, if you're an immigrant like I am, you can always tell family about your program and word can spread. Once you close a loan with one foreign national, they're going to tell their neighbor, their friend, their cousin. So a lot of times referral can just come within your own little nucleus, but you can also, use Google, Facebook, LinkedIn, go to international events. Whoever wrote that, they're doing a presentation at a real estate, something with real estate agents. That's another great way. I personally remember I went to an event where there's international real estate groups. So loan officers from a foreign country are helping Americans buy property abroad and vice versa. So that's a great way to find, leads and sources like that. And, just straight off of the list, even immigration lawyers can help too. So a lot of different places. And of course, like NAREP has events where you have, your Hispanic real estate agent. So it kind of just, it can snowball that way.
Absolutely. So for this program as well, I put together these marketing resources. Again, take a look at the slide deck that you're going to get. And these are actual links. You can click on each one to reach out to your realtors regarding your foreign national program. So again, with these, you can put in your logo, you can put in your contact info, your disclaimers, and you can start reaching out via email and even social media. So here are some general talking points about non-QM in general. And again, these are just things that we put together for you to just help start conversations around non-QM. Tanner, Janice, did you guys want to speak to anything about non-QM in general and how to get the conversation started?
Just a quick comment for me, because one of the slides I spoke to earlier was the growth of non-QM, right? And I think really this complements that slide, just to say that, and we've talked about it a little bit, there are tons and tons of borrowers that can qualify Fannie Freddie, that are choosing to come to non-QM for one reason or another. So if you think that your clientele or your book of business doesn't fit or jive with non-QM, I'd definitely encourage you to re-examine that.
That's right. Another thing too, really, is to just tell people like, look, I'm creative. I look for solutions. I think that sometimes makes you so much more valuable a loan officer than, I only do a paper. Not everybody is a paper, and maybe one day they will be, and they'll come and refinance with you or refer somebody. But I think sometimes just talking to them and saying, I look for solutions. I work with lenders like LendSure who find ways to get your deals done when it makes sense. That would be something I would say if I was an LO.
And other opportunities with LendSure. Who wants to talk through some of the other programs that we have available?
Well, there's so many. There's so many. But I'll talk a few. Maybe Tanner wants to take a few. But we do cash out up to $1 million, non-warrantable condos. Tanner's favorite, condotels.
I do
And
a
we do
lot of
have, yeah. And it just depends on the area you're at, right? Condotels could be popular in some areas and not in others. But 5 to 8 unit properties is pretty unique as well. 2 to 4 unit properties. We have that wonderful fix and flip program. Uh, my favorite, and I get very excited about, is our bridge loan, which is our buy before you sell program. I could talk all day about that, but it's a great program. So I'm going to tease you. You have to come back next week because we're going to tell you about bridge loans, and I'm telling you, you're going to your realtors are just going to be like, wow.
Yep.
It is a great door knocker to get new realtor clients, but also to impress the ones you already work with. So that's, that's one of my favorite. But Tanner, any other ones you want to touch upon?
I hit on the second homes. We talked about the LLPAs, so I often get phone calls just saying like, I can't get a rate. Literally too many points to even potentially get a rate to offer my client. So we quote out a lot of second homes that are full doc deals. So definitely keep us in mind on those. The interest only, same type of thing. As Janice mentioned, we close interest only loans that are with us for no other reason than they're interest only, right? Kick in that we can close in the LLC and they don't got to quit claim it after the fact, that we got ourselves a deal. The depletion and qualifier, we don't have this slated to be talked about, so we'll talk about it just briefly real quick. One of my favorite things to do with this program actually is to use it as supplemental income. So a lot of people, when they think asset depletion, right, using assets as income, oh, I got to have millions of dollars, I got to be rich, right? And that's not necessarily the case. So I've done lots of loans where we use a W-2 or we use bank statements and we're just short on the DTI. And so instead of saying, well, we got to come up with a gift or we got to pay off this car or whatever else, I say, well, show me your stock brokerage account that's got 700 grand in it, right? We'll deplete from that and use it to supplement your existing income and get the DTI to a place where it works. So it's not always, oh, I got to have, way more assets. I got to be able to purchase the home in cash, right? Maybe not. Maybe just having a little bit on the side, in retirement and things of that sort where you're not planning to actually use it or liquidate it, but just us knowing it's there gets us to a place on the DTI where we can qualify it. And then 1031 exchanges, that pairs really well with the LLCs. Oftentimes, if I sell a property that's held in an LLC, the 1031 is the funds in there are owned by the LLC, so you can't close a Fannie Freddie loan that way. It's literally impossible to use those assets. You'd have to buy it in cash and then cash out refi, whereas with us, you could maybe do 2 or 3 purchases with, call it 25, 30% down using those 1031 funds. So I actually did it, just a big one. Back in October through December, I closed like 15 loans with the same person that sold an apartment complex, right? And that LLC had a couple million in it. And so we used that as down payment on all these different properties instead of buying like 8 of them in cash, right? Or 7 of them in cash. So lots of business there for you as the loan officer as opposed to 0 if he buys them in cash, right?
Uh-huh. Mm-hmm.
Tanner, Sue wants to know if we do reverse 1031 exchanges.
Yes. So
I have.
yeah, you can tell by our reactions. We've done them. It's got to be vetted and reviewed by legal. It's very difficult. There's a lot of moving parts, but yes, you can speak with us about that scenario.
Yeah, I did a reverse 1031 bridge loan.
Mm-hmm.
But yes, Tanner's right. They're not easy.
I've got several questions about land. Can they buy a standalone lot? Can we finance land? What about a co-op on leased land? How does that work, you guys?
No, unfortunately, no land loans, and I believe we no co-ops either. So think residential homes.
One
No
thing we'll
mobile.
talk about next week is our fix and flip loan. So the buying distressed property and rehabbing it and getting it back to a place where it's livable. So that can kind of fit the vein of borrowers reach out asking about construction loans, right? It's kind of a pseudo construction loan in that sense where there is a renovation loan that they pull from, right? So always dig a little deeper past the top layer, right? Maybe it's not ground up construction they're looking for, maybe it's renovation, and we can do those.
I've got several questions about fix and flip. We're going to go into fix and flip in detail next week. It's one of our topics for next week, and I'll be providing even marketing materials for those. But do you guys want to talk a little bit about our fix and flip program?
I'm sure. Tanner just touched upon it. We don't do the ground up construction. We do have a dedicated fix and flip team. The application process is very easy. It's very quick. It's online. You don't need a 1003. You don't need a pull credit. It's really about knowing what the property is, what the after repair value is going to be. Is it going to be profitable? And they're going to look at those, those pieces and see if it fits our program. Tanner, anything you'd like to add?
It's just so case by case. I got people all the time that say like, hey, would this borrower qualify for a fix and flip loan? And I'm like, well, the borrower seems fine enough, but I can't really give you an answer because it's about the project. It's about what they're doing, right?
100%.
under contract, you can still identify a property you want to offer on and your scope of work on that as far as what you would do and what your target after repair value is and things of that sense. So I'm closing one on Friday. It's a great program. It's just one that's just so case by case. That online application that Janice mentioned, it's just so quick and easy to fill out. That's definitely the first step. So we'll talk about, kind of the numbers of it next week, right? As far as the ARV, the after repair value, the loan to cost, LTC, replacing the LTV, and that sort of stuff. But if you have one in the meantime and want to give your account executive a call, I'd definitely encourage you to do so.
Yeah, they'll guide you through that. And it's worthy to note we're not looking at the borrower's income for these loans. Really, what Tanner said, it's about the project. So the better you know, and the more experience the borrower has, the better the terms, right? If they're seasoned fix and flippers, they're going to know what they're buying. They're going to know what they're doing. Joe, anything you want to add on that? Because I know you have tons of fix and flip experience yourself.
No, the only thing I'd
No?
say is Tanner talks about it being one-off. They are all one-off. They are project related. We're a little more unique than some of the fix and flip lenders because we consider the broader picture, which means the quality of the borrower can have a bearing on a decision. The skin in the game, the down payment can influence my decision making. The guy's assets can influence my decision making. So oftentimes we get people coming in wanting to do, a high loan to cost type of loan, and they don't have experience. And if you don't have experience in this space, you're going to look at two things. The loan to cost is going to be pulled back, and the interest rate is going to be pushed up. And so a lot of times it requires us to dig in and get to a place where we're talking to the borrower directly and sharing with the borrower what we could do, and then we shape a loan out of it. So they come in asking for X, and they go out looking at a better loan, better for us, better for them. We kind of look at lending as win-win is the best way to go. Win-win-win, actually. Borrower wins, broker wins, we win. Everything's a happy place when that takes place. In this case, we don't really want borrowers to be doing deals where they don't make sense to the borrower. We have the expertise doing it. I've done 500 flips myself. And some of the people who don't have the experience can't say that they know their way around the space. And that's why generally people who do come in and they do have the experience, they usually know, how to do the transaction in a way that they can make money on the deal. Obviously, if they don't make money, they're not going to do it a second time. And we don't, if they're not going to make money, it could end up in a bad place for us. So it is very one-offish, though.
Yeah.
I just approved the loan just as we were sitting here while those guys were talking. My underwriter was turning one of them down because they didn't have experience, and the property was rural. Wasn't terribly rural, but it was rural, a 7-acre horse ranch. And for all of those reasons, my underwriter said, this doesn't fit our guidelines. Of course, a typical underwriter. But I'm more of a make sense kind of guy. And I said, how much is he putting down? And the answer was 40%. So I said, you bring that loan in, we'll find a way to do it. So that's where we're at. So
I'd like to expand upon what Joe's saying, because one of the things in the first slide that we talked about was the seasoned management experience, right? So to toot Joe's horn so that he doesn't have to, Joe's just loans every single day, right? He's the very hands-on, co-founder of the company. He's making credit decisions on a daily basis as far as, are we going to grant this exception? Are we going to do this loan? Does it make sense? So we're one of the most flexible lenders in the space when it comes to, having the ability to grant exceptions and do outside the box loans that wouldn't meet a guideline in the country, right? For any other lender, their own. So we close things that are absolutely wacky sometimes when it makes sense, right? When from a credit risk perspective, we believe the borrower is going to perform and we have good compensating factors that make up for wherever we're weak. So just the ability to bring a loan to us that nobody else in the country can close is definitely unique, and something that you should keep in mind when you run across those tough files that you feel like, man, this is a good borrower at the end of the day, right? Like, yeah, they don't have X, Y, or Z, but they make up for it, I feel like, and we may agree with you.
Yep, it applies to all our files. Joe, Joe's very, very good about helping when things aren't quite in the guidelines. He takes a look at that, and he is a common sense guy. So I'll second Tanner's thing. So thank you, Joe.
But we're
Yeah.
not asking for your bottom of the barrel business. That's not what we want to do. I mentioned earlier the securitizations that we do, FICO 730, 740, average LTV 67. We look for compensating factors. We want to make loans to people who we think that will pay us back. Our loans outperform everybody else's in the space. We know we're very good at common sense lending.
Fantastic.
Absolutely.
Guys, on bank statement loans, can the borrower commingle their personal and business under one account?
Interesting
Yeah.
question. I love your wording there, commingle. Love that. Love that. Well, here, what we're trying to do is get to an income number. And so the way I'd answer that is we do allow for multiple sets of bank statements on our bank statement program. That could be multiple corporate, C Corp accounts, business accounts, that is. It could be occasionally we'll accept the business bank statements and a personal, if you can put on display that they bring in a certain revenue stream to the personal that doesn't pass through the commercial, the business accounts. Sometimes you can do that, sometimes you can't.
Yeah.
But what we have found with doing bank statement loans is every borrower is unique and they all manage their financial side of their businesses uniquely. So that's another area where we're a common sense lender. We want to understand it, so we'll ask questions. We'll go back and forth with you and or the borrower and try to get to a place where we're comfortable with it.
I'll give you a couple quick examples to expand off of that. So to answer your question a little directly with a loan I've done recently, I had a borrower with a business bank account that we were using for income, and then they had in their personal account just about every month checks being deposited that were business checks. And I'm like, why are they putting it on their personal and not their business? And the answer was, I don't really know. The borrower doesn't know either. That's just what they do. I'm like, okay, well, can we get copies of the checks? Can we get proof that that's business income? The answer is yes. And I'm like, all right, well, then we can use that income. So it's very much a judgment call. It's case by case, right? We would prefer that all the business income goes to the business account. If it doesn't for some reason, but we can prove it's business income, we have a good shot of using it. If you're asking more about like if they operate their business out of a personal account, we do that all the time. So, but going back to what I said about DoorDash, right, and Uber and things of that sort, a lot of times people don't set up separate business accounts, right? Everything just runs through their personal. We'll take the personal. We just have to identify, okay, this is business income and this is receiving payments from Zelle from their family, paying them back for lunch the other day. Can't use that as income, right?
The better,
and then the last,
yeah.
go ahead, Jane.
I was gonna say the better understanding you have on what they're doing and you tell your account executive, the smoother the process. That's all.
Mm-hmm. And then the last example I was going to give, building off Joe's, every borrower is different. It's really just about common sense underwriting. Is a loan that I actually am about to close that was a fallout from Rocket, because Rocket does bank statement loans. There's a lot of people that do them now. It's kind of the bread and butter of non-QM. So a lot of people have jumped in and said, yeah, we'll do bank statement loans. It was a very, very clean, straightforward, perfect file, except for a borrower had a couple NSFs, non-sufficient funds. And the business wasn't struggling. It wasn't anything that would indicate an issue that the borrower wouldn't be able to perform and wouldn't be able to repay our loan. There was just some accounting snafus that had happened, and there were a couple of non-sufficient funds. And we said, you know what, we really don't see that as a risk to our loan here. Our LTV is good, our FICO is good. We're going to do that loan. So we're about to close it. So I tell you guys, the bank statements, there's just so many different things that go into why a lender may turn it down where we wouldn't have an issue with it, right? There's just lots of small things that they may look at and take issue with that we don't.
Okay. For our fix and flip loans, and Nick, yes, we are going to go into detail next week on fix and flip. We're going to go through the whole program in detail. But one question with the fix and flip is, does it have to be a licensed contractor, or can the borrower do the work themselves?
Yeah, I'll take that. So no, the person whom we lend the money to can be Johnny Lunch Bucket, or can be just an investor who doesn't know anything about contracting and subcontracting, or it can be the contractor themselves. It could be one of those things. Now, we do want to know that if you bring someone in and they've never done a flip, we're going to say, oh, okay, so you're using a contractor, correct? And you do have a scope of work, correct? If the answers are yes and yes, we're in like Flint. If the answer is no, we were going to do it ourselves, me and the mama, probably no. Unless, of course, he's putting a lot of skin in the game up front, then I might make an exception to it. But generally, we want there to be some reasonableness to it. So obviously, if someone's never done it before, we're going to say, show us the scope of work, show us that you've got a contractor. We're going to actually do a little due diligence on the contractor. But we have those. I actually, what I've seen so far is doing these fix and flip loans through the wholesale conduit. Many brokers, loan officers don't know much about the fix and flip loans, so they're leaning on us a little bit. And a lot of the borrowers whom they bring to us are more one-off in nature. They're not, there's some exceptions to this, but they're not the professional fixer and flipper that's doing one a month. They're one-off. Maybe they've done one flip, two flips, three flips. Maybe this is their first flip. Lots of unique stuff. Like I just bought the house last week for $240,000. I paid cash for it. I don't have any experience doing this. What next? And we have to coach them through it. So it's kind of all over the place. But we're actually finding that we're doing loans, and I like the loans. I think they're good risks, and we're closing them. So anyway, I think though at the loan officer level, you guys can find experienced investors when you're out looking for people who to sell DSCR loans to you. A lot of those same people are people who are flipping properties. So there's the fix and flip, fix to sell, and then there's the fix to hold. And there's a lot of people saying, well, I want to fix this one and I want to keep it, own it, and just get the rents. So.
What documentation do you need for non-warrantable condos?
Same as all loans. Really depends on the loan. Is it a bank statement loan? Is it a full doc loan? Is it an asset depletion loan? There's no additional documentation on a non-warrantable condo. The non-warrantability could be because of a number of different things. If it's litigation, we're going to need the litigation up front to determine if we're going to go forward with that litigation. If it's investor concentration or things like that, we're just looking for the HOA cert to tell us what the issue is.
Mm-hmm.
Okay, what's the max DTI allowed on the 40-year term?
50%.
Okay.
Well, caveat to that. So yes, we also have a high DTI program, however, though, which starts to change a little bit how we look at the max DTI. So it's a program for primaries only, where we allow the DTI to go to 55 on the fully amortized payment if the DTI on the IO payment is under 45. So typically the numbers only shake out and make sense in the jumbo space. If I have a $3 million loan, the IO payment on that is several $1,000s less, right? So my fully amortized DTI may go up above the 50 as long as it stays under 55 if my IO DTI stays under 45. But if you're talking about like an investment property, we're not utilizing that high DTI program, then yeah, we cap out at the 50 DTI using that starting IO payment.
Mm-hmm.
Okay. Just a quick reminder to everybody, you should have this on your calendar, but session 2 is next week. We're going to be covering bridge loans, condotels, and fix and flip. So please remember to join us next Wednesday. I'll go ahead and send you guys a reminder email, but just in case, part 2 is next week.
You
I've
won't
got a
want to
couple,
miss it.
yeah. I've got a couple of different questions about ITINs. For a foreign national, is a credit report ordered under an ITIN? Um, ITIN with ITIN investment with bank statements? Can you do that? Can you guys tell us a little bit about the parameters around our ITIN program?
I believe I think I touched upon the I-10 question for the credit report.
Before national.
Yeah, but you would if this is an I-10 loan and somebody buying a primary, they live and work in the United States and have an I-10 number, then you would pull credit with their I-10 number. And as far as investment properties, right now we're not doing investment properties for I-10 borrowers, right, Joe? No, just primary. To my knowledge, that is just primary purchase.
That's true. It's a narrow market in terms of the investors who ultimately buy those I-10 loans. But let me expand a little bit. So when we think about I-10 borrowers, we don't think of them as foreign nationals. They're two different things. These are people who do live in the US, which Janice just said to you. And a foreign national does not live in the US. Foreign national can come for a number of months each year, and then they got to go back home. So they are allowed to own a second home, and they are allowed to own investor homes. They are not allowed to live here full time. Okay, that's the rules around foreign national. I-10, they live here, they work here, and all that we're looking for is their I-10 number, and then of course Janice spoke to the credit. So there's a differentiation between those two groups.
We're per our guidelines right now, we're doing primaries and second homes for ITINs. Second homes
We're one of the few people that do second homes. Most folks in our space doing foreign nationals, they force you to go to an LLC and make it an investor loan, and then they measure it based on the DSCR. If it is cash flow positive, they do the loan. If it is not, they don't do the loan. So an important nuance is we don't do that. If they want to buy a second home, we'll go the second home route. And what that means is we're using that income letter from the CPA or the company that they work for in China.
Right, and that's for a national, not the I-10. So
yeah,
correct.
For actual I-10 borrowers that are the ones living in the US, those are the ones where, like Janice said, we want to pull their credit using the I-10, right? We're taking a look at their full doc income in most cases. We can do 24 months of bank statements, sometimes 12 months of bank statements as well for I-10s.
Which is huge. That's very different from other lenders, right? So self-employed I-10 is available.
I-10 loans are a little funky, okay? These are people who are not supposed to have social security numbers. So some of you might be wondering, well, how do they get a credit bureau report if they don't have a social security number? Because you can pull a credit report using an I-10. Some of them have done that. Others have used other people's social security numbers. That's a problem. So we look for those things. We know our way around that topic. And so they're unique loans.
As with all the loans we do, got to make sense. Got to have skin in the game. Got to be somebody that we believe is going to repay, right? Have they been in the U.S. for 2 years, or have they been in the U.S. for 15 years? Have they been at the same job for 3 years, or have they been at the same job for 20 years, right? Those types of
we're asking, one of the main questions is, do we know who we're lending money to?
Yep.
How long on average does it take to close a foreign national loan?
A couple weeks, really. It's driven by the appraisal. You know, how fast you get an appraisal, that's usually what will be the biggest thing that takes time and doing a loan. In terms of getting a loan approved, you know, our pre-qual process is something that we actually that's another uniqueness to us. We like to get a good sense for what the loan's going to look like up front. Hence, we ask for the 1003 credit and income up front. And then we tell you to don't trigger disclosures at that stage. So submit the app with 5 of the 6 elements of the application. We usually turn that around in 24 hours. But the goal there is to give you a fairly solid approval within 24 hours, meaning we've vetted the income, we've looked at the credit. We don't want you keeping secrets, no secrets. What we're trying to do is take the 11th hour surprise out of the game. So no surprises for the loan officer, no surprises for the borrower, no surprises for the 2 realtors. No surprises. We don't like surprises. We think it's a bad way of doing business.
Yeah. So the driven by the appraisal thing is really the primary answer there. But to hit on one more thing we talked about earlier about investor loans is we don't abide by TRID. So part of the answer to your question is it a second home or is it an investment? Because if it's an investment, we can send CD out and Doc can, you know, sign the loan the next day. We don't have to wait 3 days, right? So that's part of the conversation as well. Versus if it's a second home.
Well, and for foreign nationals, sorry, just keep in mind that you do have to translate documents, and that can take a little bit of time if you don't find a third-party translator to do it for you. So always reach out to your account executives and let them know what could slow this down. And I always say try and get those things translated sooner rather than later.
Can we do cash out refis for foreign nationals that own investment properties in the U.S.?
Yes.
Sure.
We have a list of approved countries or a list of not approved countries.
Yes.
Not approved.
There's only one.
Go on.
Go ahead, Joe.
I was just gonna say there's only one that is problematic, and I think that's where you were headed, right?
Well, why don't you finish your question and I'll let you know if you got it right.
Yeah, so I mean, most countries are fine as far as whether we can get a credit report or not. That's a separate conversation. But the only country that would pose issues for us is Venezuela.
There's more countries that have issues.
It's if the country has been sanctioned, the answer is no, we're not doing those foreign nationals. So Russia is under sanctions. Venezuela is under sanctions. There are others. If they're under sanctions, we're not going to be able to do a foreign national loan.
Does an investment property borrower need to have their own primary residence?
Usually, yes. I would say very few cases I've done a DSCR loan with somebody who didn't own a primary. They owned multiple investment properties and lived at a condo by the beach paying a lot of rent. So we have occupancy questions when they don't own.
That's Janice thinking about DSCR, but there's plenty of investors who come to us with full doc and light doc and bank statement doc. We make those exceptions. We make those exceptions all the time.
Yeah, the answer really doesn't.
I'm sorry, what's the maximum number of units on a DSCR loan?
8.
I don't understand that question. Let me answer it this way. So when you ask me what's the maximum number of units, are you asking about the property type, 1 to 4, 5 to 8, or are you asking how many investor loans can I do to the same borrower? Is that number 8, 10, 12, 15, 20?
Stephen, if you could answer that question, we will follow up with it. Stephen is talking about property type.
5 to 8.
5 to 8.
All right, fantastic. And sorry about that. Yes, this webinar is being recorded. Yes, you can get a copy of the slide deck. Look for an email from me in about an hour. So we're getting close to the hour-and-a-half mark. There are some questions that are left, but I'm going to go ahead and reach out to you guys individually with these. I have a list of questions. So with that, I want to say thank you so much, everybody, for joining us today. And we will see you again next week for the for part 2 of this webinar on how to sell non-QM. Janice, any parting words?
I'm excited to see you next week, and I hope you learned a lot. And reach out to your account executive, and we'll help you get started closing more loans.
Awesome. Tanner, any closing words?
Ditto to that. Excited for next week. We're going to cover a lot of amazing things. More just kind of back and forth and question answering if you guys have some unique questions. But yeah, reach out to us. We're here to help you.
All right, Joe, any parting words?
Just thanks for working with us. Appreciate it.
All right, thank you so much, everyone. See you next week.
Bye.